Let's now talk more about your team and your role in particular. And if you can help us understand more about what exactly is debt capital markets, and just give us a brief overview of what are the different kinds of things that you end up doing there.
Sure. So, in terms of debt capital markets, let's talk about what are the various types of debt instruments first that form the entire debt universe. So, there can be short term debt and long term debt. So, short term debt is instruments like commercial paper, working capital facilities. Long term debt can be bonds, or as they are called in India, NCDs, non convertible debentures. Then there are loans which can be syndicated facilities, or they can be bank loans, which could be bilateral in nature. So depending on the requirement of a particular company and depending on their access to a particular market, an appropriate instrument is decided. And accordingly, the investors who are relevant to that particular market and the investors who are able to regulatorily participate in such instruments, those investors are approached, and accordingly orders are sought and books are built. One more type of bifurcation in terms of debt instruments is whether the security is publicly listed or if it is private. So there are two so-called debt markets. One is the public markets, where debt instruments, just as equity is traded on stock exchanges, similarly debt instruments are also traded on the markets. So publicly listed bonds, publicly listed NCDs, these are traded on a regular basis, and their quotes are also available if you would want to go and look up their rates. On the private side, of course, as I mentioned, for something like a bank loan, that a few banks have come together and decided to give a loan to a particular company. This is not something that would typically be listed on an exchange. So this is more in the domain of the private debt markets. Where I specifically focus on is US dollar debt that is issued by